AMC released the second quarter of 2021 earnings today, and they were kind of good. Okay, they were pretty good because they beat the expectations. And you can see on the screen, that the stock is already moving after hours. We are up 3.85% at the time of this recording, but it went all the way up to 7% previously. Now there was an analyst that kind of gave his opinion on why he thinks the share price is decreasing from the highest in June of $70. And it's really interesting how ridiculous it is. Okay, let's listen, and we're gonna talk about it in a second.
Rich, because shareholders make up about 80% of shareholders are retail investors, 4.1 million of them, according to Adam Aaron in a tweet recently. And the call is going to be opened up to retail investors. As an analyst on Wall Street with a sell rating on the stock, do you have the same access that you had before to the company and to asking questions on these calls?
AMC was not taking our questions before or after. They sort of shifted to focus on their retail shareholders. I think just the important thing to remember is there's been sort of a lot of questions or a lot of story out there about sort of these quote unquote diamond hands of these retail investors sort of attacking the short sellers. And the reality is short interest has really dried up. I mean, this is the crazy thing now is that you've got a lot of retail shareholders trying to convince other retail shareholders to buy the stock while they're clearly dumping the stock. And I think the stock's basically halved from its highs. It just shows you retail is selling, and the reason they're selling makes a lot of sense to us. The reality is the box office is very underwhelming, and movie studios. I think the single biggest question over the course of the remainder of calendar 2021 is if you're
You know what? I don't even want to continue and listen to what he has to say, but it's it's really, I mean, it's almost ridiculous, guys. Okay, first of all, let's look at this map. Okay, this is the most traded stocks in Europe throughout the month of July. Okay, you can see AMC, Alibaba. Okay, Alibaba, AMC, Alpha Bank, AMC. Okay. So AMC was the most traded stock in Europe throughout July. But you know what? Europe is not even the biggest marketplace for AMC because it's North America, okay? Canada and the US. And also consider the Koreans, okay? I mean, AMC is bought all over the world. But in here, in America, in North America, AMC is still the top of the most traded stocks. But why in the heck will this make sense, okay? If 65% of the volume is being done through dark pool, okay? Look at since the beginning of July, okay? More than 50%, sometimes even 71%. No wonder our orders are being rerouted. No wonder, the short interest that he's mentioning is drying up. Okay, because they are parking and hiding all our buying pressure. But why suits are buying? Why do you think institutionals are loading up? Why do you think it doesn't make any sense, guys? And I mean, I'm kind of frustrated because this is what a lot of people will kind of stick to the story, and it's not just true. It's just not true because shorts are not obligated to report the short position. So you cannot sit there on CNBC and give me the numbers rational behind the short interest because that data is not accurate. It doesn't reflect the reality of things because the shorts are not, first of all, obligated to report the short positions. But when you have more than half of the volume being traded on dark pools, it does make sense. The short interest is drying up. Okay? And guess what? They have been saying the exact same thing. They have been saying the exact same thing when AMC went all the way to 20 and back down to 5. Retail was selling. No, we were not selling. Maybe day traders or swing traders. Maybe 1% of the apes. But those kind of came back because of fear of missing out. And now that we went to 60 or 70 and now back to 32, 33, the same story? No, man, it doesn't add up. So this is mostly for all the apes or the new guys who doesn't have, any most experience and are kind of listening to such crap and we make the investment decisions based on what such people say on CNBC or Market Watch or whatever. Okay, again, that's why you shouldn't even listen to anybody else in order to invest the hard-earned money you work your ass for. Even not me, because I'm just a random guy on YouTube, people, okay? And I'm just giving my opinion. So we might have to agree or disagree on things, but even the streets, even the professionals, even the so-called smart money, the analysts, sometimes they suck. They completely suck at their job, right? So I'm just saying this, guys, okay? Just my 2 cents, but you already know.